Hey, welcome back to YT Finance, and today we are talking about the top 5 best stocks that billionaires are buying right now. So these stocks are going to be companies that smart money and hedge funds and billionaires are acquiring during this negative macroeconomic environment. For more videos just like this one, remember to go and smash that like button right now, comment your favorite stock down below and I may report on it, subscribe if you are new, and without further ado, let's jump right into today's stories. So in this video, we're going to look at how many hedge funds own these companies, and we're going to be tracking a billionaire named David Tepper, who also owns his own hedge fund, which has been extremely successful. So we're going to start off with our first pick, and again, this is going to be reverse order. So number 5 is actually going to be worst, and number 1 is going to be the best, and we're going to start off with Uber Technologies Inc., ticker symbol UBER, which trades for $31 per share as of right now, but professionals believe the company is worth anywhere between $26 and $76 over the next 12 months. So clearly this company is trading at the lower end of the spectrum, which could indicate that this company is a good buying opportunity, and smart money and hedge funds seem to think so, considering that out of the database, around 129 hedge funds own Uber Technologies in their portfolio. Now, specifically, for billionaire David Tepper and his Appapalooza Management LP 13F portfolio filing, he only has a 1.28% allocation to this particular company, which in my view is still very good risk management. Again, ideally you would want to keep your allocation to companies at around a 5% initial allocation. However, it can most certainly grow more than that to around a 10 or even above for your overall allocation for this company. If you didn't know, Uber Technologies has a technology platform that basically processes independent ride-sharing and ride services, making this company a ride share or ride service provider. It also offers a plethora of other types of transportation options, which would include general transit, bikes, and even scooters. They also give their consumers access to food delivery services, freight services, business fleet services, and potentially same-day delivery options if you order something. This particular company in the beginning of this year released their financial results for their quarter, which ended on June 30th of 2022, and they brought in revenue of $8.1 billion, which would mean they increased their revenue during a bad and negative macroeconomic environment by 106% year over year. However, they still did report a net loss of $2.6 billion. But I want to mainly focus on their revenue. Remember, for the past few months, revenues have been quite disappointing for a plethora and a variety of different companies, so it's actually good to see that Uber Technologies is still increasing their overall revenues at a pretty decent clip. So we're definitely going to keep our eyes on this, but this is one of the many companies that smart money is buying right now, so retail investors such as you and I definitely need to be paying attention. The next company we're going to talk about, to no one's surprise, is one of my favorite all-time companies, which is Alphabet Inc., ticker symbol GOOG, with around 153 hedge funds in our database tracking this particular company and holding this company in their portfolio. Now, what I like about this company is that not only are they gigantic, but I think they're very undervalued right now. Right now, the company is only trading at $102 according to their share price, but professionals believe that the company should be trading at minimum of $132 and at a maximum of $164. So clearly $102 per share is not cutting it, thus we could conclude that this company is potentially undervalued. Alphabet Inc. is the parent company to several major companies and institutions such as Google as well as YouTube and many others. The majority of Alphabet's revenue is actually generated by Google and their various services and YouTube in terms of the ads that are shown on their platform. Alphabet is actually the #1 ranked stock according to David Tepper's Appapalooza Management LP's portfolio, which we got to see through their 13F filing, and they have a portfolio weight of this company of 13.73%, which is very high, especially for smart money to be that allocated to one particular company. But if you're gonna bet on one company, I would probably bet on Google, just because they are absolutely amazing in the technology that they have and how innovative they are. Another really good catalyst for this company is that Alphabet Inc. announced the release of the Android 13 earlier in August, and they're also also adding multiple new features to this particular product, which enhances personalization as well as privacy. The revenue that this company generated increased year over year by 13% to $69.7 billion, which is absolutely insane for a company as large as Alphabet to increase their revenues by 13% is absolutely astonishing. I also want to say that their net income decreased by around 16% year over year to $16 billion, but again, it's really good to see how these institutions, or at least some institutions, are scaling their revenues even during times of macroeconomic uncertainty. Now, the number 3 company in this list is going to be Meta Platforms, ticker symbol META, which has a backing of 184 different hedge funds and smart money according to this particular database. Right now, the META stock price is $144 per share, while experts in the particular industry believe this company is worth anywhere between $140 to $466 over the next year. These are the types of companies that smart money is buying while the overall stock prices are falling in the general markets. While the stock prices are falling in general, you want to buy blue chip companies, dividend yielding companies, value companies, or companies that you think will make you a fantastic return. But while the stock price is falling, this is the best time to double down on your high conviction plays. Not your single growth stocks or stocks you think are going to pop off in the future, but you need to go back to the fundamentals and the value that these companies offer, which is why all of the companies on this list are absolutely fantastic in my personal opinion, and I own every single company on this particular list. However, when we go to Appaloosa Management LP's stake, they have a very large stake in Meta Platforms Inc., ticker symbol META, which was formerly called Facebook Inc. If you didn't know, this is a technology conglomerate that's focused on building products and connecting communities through their various applications, which would include Facebook, Instagram, Messenger, and WhatsApp, among many others, including Reality Labs. Because again, Meta Platforms is really betting big and investing into the metaverse, which I think could be a complete flop, but even if it doesn't work out, this company is a cash cow that is firing on all 4 cylinders. Mainly, Meta Platforms' revenue comes through their advertising, and they get to advertise to around 3.65 billion monthly active users. Again, 3.65 billion. And that's literally almost half of the entire planet. So it's no wonder why Meta Platforms is ranked number 2 in David Teber's Appaloosa Management's allocation for their overall portfolio. And again, this is a fantastic company to own, even if the metaverse doesn't work out. Its total revenues declined by 1% year over year to $28.8 billion, which is why we've seen the company pull back in their stock price by a large margin, while their net income declined by around 36% year over year to only $6.7 billion. And this has caused various analysts and stock professionals to pull back their price targets for this particular company. However, a Morgan Stanley analyst lowered their price target from $280 down to $225, while Loop Capital lowered their price target down from $180 to $165. But with that being said, all of those price targets are still above the stock's current price of only $144, so this could be a phenomenal blue chip company to buy on weakness. In our number 2 spot, we have one of my all-time favorite companies, which is Amazon, ticker symbol AMZN. Amazon is currently held by 252 hedge funds according to the database that we are using, and the particular hedge fund and billionaire that we are analyzing has a 10% allocation to this particular company. Right now, the AMZN stock trades for $122 per share, while analysts believe the company should be worth anywhere between $110 on the low end and $232 on the high end. Amazon.com Inc. is, of course, a multinational technology company that operates a plethora of different segments, and it has a load of different subsidiaries. Literally, it manufactures and sells various electronics, it develops and produces media content, and they have a gigantic e-commerce platform. This company ranks as the number 3 top listing in David Tepper's Appaloosa Management LP's portfolio with a 10% rating. And again, I personally like every single company on this list, and these are all fantastic stocks to buy while the stock market environment is suffering right now, because it's safe to assume that all of these companies are going to survive a stock market crash and a recession, and that none of them are on the edge of going out of business. Clearly, these are very good long-term investments that is going to make you rich over the long term, which is why I also own all of these companies. Now, if we look at their fundamentals and financials, we can see that when Amazon released their results for the second quarter of 2022, its total revenues increased by 7% year over year to, get this, $121.2 billion, while it reported a net loss of $2 billion. So again, this is very good to see a company as large as Amazon still increase their revenue year over year above a 6% revenue growth rate, because normally the bigger your company is and the more revenue you're bringing in, the harder it is to actually grow that revenue on a percentage basis. This is why a lot of investors try to invest into small cap companies or growth stocks or even penny stocks, because they understand that these companies have the potential to absolutely surge. But for me, I would rather invest into companies that are tried and true, that will build me wealth over the long term without me gambling my hard-earned money away on companies that I'm not even sure will surge or not. Now, with that being said, this is going to lead us to our number 1 pick, and this is probably my favorite company on the stock market, which is going to be Microsoft, ticker symbol MSFT. Now, this company is held by 258 hedge funds that are currently in this database, with a stock price target of $250 or $411 on the bullish high end. Right now, the company trades at $245, making it undervalued, because even the lowest price target for this company comes in at $250. Microsoft Corporation, if you didn't know, is one of the largest technology companies in the entire world, and it's most known for its various products and operating systems and business solutions. Microsoft literally has 1.4 billion monthly active devices running on their operating system, which is their Windows operating system. And of course, David Tepper's Appaloosa Management's LP owns a 4% allocation to this particular company. Microsoft has fantastic financials. We're brought in the second quarter ended June 30th of 2022, $51.9 billion, which is a 12% year over year increase, which again is extremely impressive for a company as large as Microsoft. Their net income increased also by 2% year over year to 16.7%, and that's what I really want to hone in on, because unlike the other companies on this list, Microsoft was one of the companies that actually increased their net income despite a negative macroeconomic environment. So not only are they growing during macroeconomic uncertainty, but they're also increasing their net income, which is absolutely amazing and wonderful, and you would just want to buy this company if you plan to hold it for the long term. Also, I want to mention that I did a previous video on Microsoft and how much I love them when they acquired Activision Blizzard, so they can accelerate growth in Microsoft's gaming business. And all in all, Microsoft is extremely fundamentally solid, and I would recommend, honestly, all of these companies on this list. However, we have to remember that you should always do your own research and your own due diligence, because everyone has different strategies, they're at different ages, and we all have different risk tolerances. But once again, I want to go through all the companies. We have Uber Technologies Inc. in our number 5 spot, and then we move on to Alphabet Inc. in our number 4 spot. In our number 3 spot, we had Meta Platforms Inc. In our number 2 spot, we had Amazon, and of course, in our number 1 spot, we had Microsoft. Now, depending on what investor you talk to, they are going to put those companies in a different order from best to worst. But there's really no arguing that all of these companies are absolutely phenomenal, and they have returned and made people extremely rich by increasing a shareholder value over time. So I would love to hear your thoughts down below. Remember to go and smash that like button right now, subscribe if you are new, and I will see you in the next YT video.